We're 2 years on from the depths of the financial crisis as it hit this region. How has the banking sector changed? How has it evolved over the last couple of years?
Well, from a very high growth of 20 to 30% 3 years ago, now banks are going more focused on customer experience. They're looking to have when customer come to banks, they should have a great experience. So now we are bundling product and service to a customer. So in one stop, he can really get almost everything he wants rather than buy every single product on a different experience, etc. So that's customer also going through looking at customer centric. In the past, banks more are driven under silos. You know, they have the credit card, you have the mortgage guy, you have the current account guys, etc. Now we're no longer going to do this silo management. We're going to look at customer as one, and we should offer him one-stop experience.
There have been changes to the regulatory environment, new rules from the Central Bank of the UAE, the prospect of more to come, perhaps a new banking law on the way as well. What's all that meant for the way banks operate?
Of course, the regulation are welcomed. We encourage some regulation, and our central bank are being fair to regulate, but not over-regulate. And we're happy that to see them, they have not really touched on the fees, charges, interest rate. They left that to free market demand. And where now banks can also compete on the price and can compete on the services. But some of these regulations have limited banks' ability to lend more. Of course, that ability to make money from the retail customer now is going to limit the bank's profitability. But that's okay.
Mashreq, obviously a Dubai-based bank. You're active elsewhere in the GCC, elsewhere in the UAE. What are the key markets for you?
Well, of course, we are a Dubai-based bank, but we are actually a UAE-based bank, and we can be only successful if we serve the entire UAE, Dubai, the rest of the Emirates, and of course, Abu Dhabi. We see Abu Dhabi has a great potential in the coming years, and we need to participate in every single activities in the economy side, and we want to still expand our retail banking in Abu Dhabi, so we can offer every single product that we offer here in Dubai to the rest of our customers in Abu Dhabi. Of course, Qatar, Kuwait are in the GCC. We are in Bahrain as well. We are in Egypt. So regionally, we want to focus on where we are now, and we think in the next 3 years there's a great potential in the region.
Within those countries you've mentioned, which is the one that you find the most exciting prospect?
Qatar. Our success will depend on the growth of the economy. If the economy is growing at 10 to 15%, we have a lot more to participate. But if the country X is only growing at 2%, whatever we do, we can only grow at 2%, or we start grabbing market share of other banks, which is fairly difficult. I mean, it's difficult to grab market share, but it's easier to grow with economic growth.
Many banks in the GCC have a capital adequacy ratio well above 20%. Mashreq has a capital adequacy ratio of 22.6% at the moment. Is this a sensible number? Is this a trend that's going to continue?
I hope not. I think a 22.5% of capital adequacy ratio is way too high. It has to come back to 14, 15%. That's a reasonable number. And to have excessive capital adequacy is a misuse of shareholders' money. Many shareholders elsewhere will demand the return of this excess capital to them so they can invest in better investment opportunities.
Well, what are the investment opportunities for Mashreq? You need to reduce that capital adequacy ratio without giving the money back. You need to lend more.
We have deposit to loan ratio at 74. We have too much liquidity today, and we have to lend a lot more in the market. But we can only lend if the economy is growing. And we have seen now the trend, the economy, we've seen the worst, and we've seen the trend, the economy activities is picking up. So hopefully we'll be able to do a lot more lending in the next 2 years.
There's been a lot of excitement in the financial markets over the summer. US debt downgrade, turmoil over the dollar. How's that affecting the outlook for the economy here in this region?
We're somewhat isolated from the rest of the world, particularly on our economy. We've seen trade is picking up in the UAE. We've seen tourism is picking up. We've seen even real estate, it's bottomed, and now prices of finished properties have started picking up in the UAE.
Of course, the dollar's not been the only issue facing the financial markets. We have the turmoil in the Eurozone. What's been happening with the euro meant for the prospect for the single currency here in the GCC?
I think it's a great gift from the Eurozone crisis to the GCC union, currency union. We have to learn and we need to understand what made the euro currency fail. Now, from that experience, we should bring it here, and we should not rush into a currency union before we get our policies right.
Thank you very much, Your Excellency.
Thank you, Robert. Thank you.